Hey folks, Roger Scott here. I want to talk about something really cool and something that I usually don't talk about. Now, I'm going to talk about pairs trading. Now, you may be more familiar with link trade, which is how Jeff Zinnineri refers to them, but pairs trade, links trade, either way you look at it, you're buying a strong stock, you're selling a weak stock. That's all there is to it. So I'm gonna try to do a pairs trade today for you and show you a good pair trade that can help you make money over the next quarter for both technical and fundamental reasons. So let me get into it and show you this trade right now. So I was reading typically on Sunday. I block out about 2-3 hours to do some research. And what I do is I look at analyst ratings and what analysts say. And I like to look at Bank of America, Goldman Sachs. I like to look at JP Morgan. And I was reading an interesting article about consumer versus credit risk. And I'm always thinking, how can I help you guys make more money? So I thought of a really good pairs trade that could help you take advantage of the current market cycle, help you take advantage of the investment behavior of people during the COVID climate, and teach you relative strength all at the same time. So the two stocks that I'm going to be looking at today is American Express and Discover Financial Services. And the first thing I did was I noticed that they were pretty high up on my relative strength scan beginning of the year. But now, if you look at my relative strength scan, and this takes 500 stocks, 500 S&P stocks. If you look at the first page, this is the first page, you will see that Discover Financial Services, and this is the first page. As you can see here, and there's 5 pages, there's about 100 stocks per page. So Discover is about halfway, a little higher than halfway on the first page. Let me see if I could find it again. I just had it here a minute ago. Here it is. There it is, right there. So let's see. Yeah, about halfway down. So I would say it's the top 50th stock, give or take, kind of in line with Nike and Darden. So it's in the top 10th percentile of my relative strength scan, which is not bad, okay? So if we were looking at the NASDAQ 100, it would be top 10 stock. That's a pretty strong stock. But when I look at American Express, I'm going all the way to second page? No. I'm going all the way to third page? No. I'm going all the way to the first part of the fourth page. And here's American Express. So Discover is in the top 10th percentile, or say 10th percentile. And this is like all the way towards the end. This is towards the bottom of the S&P. There's only about 150. This is like the 350th. 50th spot versus 350th spot. I'm ballparking. Don't quote me on the exact number. I'm just giving you kind of a broad stroke. 50th out of 100 out of 500 stock, 350th out of 500 stock. So the relative strength is clearly favoring Discover Financial Services. As you can see here, the stock, let me see, all-time high near, no, but it's coming back. It's not near all-time highs. All-time highs are around $93. It's at $64. But as you could see here, if you look at a 9-month, it's making a 8-9 month high. It's breaking out. It's the high. It's above the highest level we saw a few months back in the summer. So the stock is breaking out right now. It's at a really good buy zone. If you look at a 6-month, you could see here it's doing really, really well. 6-month, 9-month high. But if you look at American Express, it's not doing well at all. It can't even make recent highs or break higher. And if you look long term, it's really, really doing bad. And one of the reasons for this, as JP Morgan pointed out, is they believe that consumer behavior will normalize faster than corporate behavior. And American Express is mostly focused, not mostly, it's split between consumer and business. They've got a lot of business accounts, a huge amount of business accounts. Businesses are not doing that great and they're not borrowing right now. Remember, American Express, you got to pay back right away. So it's a very short revolving line of credit. They have a lot more risk. According to JP Morgan, Discover should outperform Bank of America in the first quarter on the basis that consumer behavior will normalize faster than corporate behavior, adding that a high quality borrowing base dampens credit risk. Very, very true. American Express should see solid spending and credit from its consumer segment, but corporate travel, entertainment, spend will be challenged through the first half of next year and amid heightened SMB credit risk. JP Morgan is underweighting American Express based on that, but not Discover. But again, those are fundamentals. But fundamentals are great, but I like to see technicals and fundamentals be on the same page. And in this case, we clearly are. It makes perfect sense too, because Discover doesn't give credit loans. They only give consumer loans. And based on consumer spending, retail sales, consumers are still spending. They're just doing it differently. They're doing it online. But fortunately, you can buy pretty much anything you want through Discover Financial Services. Through their card works in, I think, 80-90% of all online retailers, especially big stores like Gap, L Brands, stocks that are, let me show you the big ones here that are cleaning up right now. Let me show you really quick. L Brands, Whirlpool, Gap, Hanes Brands. They're welcoming Discover Card with open arms. Fortune Brands. All of these work with Best Buys, Target, Walmart, all so forth and so forth. They accept Target. They also accept American Express. But again, there's a lot less people using American Express right now because American Express is relying on business. Okay? Now, let me give you a little bonus. I'm going to show you how you can position size. I'm going to show you this for stocks. If you're an option trader, you're on your own. But I'm going to use a very simple indicator called average true range. So if you ever want to buy one stock, sell another stock, buy two stocks, you want to average your stocks. Here, let's find average true range. It'll just take a second here. Average true range. And I like to use 10 days, and I don't like any smoothing or any kind. Now, what this will tell us is what the dollar value, for every share you buy, what the volatility of that is. So for every share you buy of Discover, it's trading at about $2.45 volatility-wise. If you look at American Express, let's go to American Express here. It's moving, wow, pretty similar. $2.75 here and $2.45. Almost dollar for dollar. I wouldn't even mess with it. So basically, for every 10 shares you would buy of Discover, you would sell 11 or 12 shares of American Express because their volatility is so similar. I thought it might be twice as higher, so I would say for every 10 shares here, you do 20 shares. But $2.45, yeah, their volatility is almost the same. So they're almost one for one. So if you want to do the spread, you buy 100 shares of Discover, you sell 110 shares of American Express. Again, their volatility is literally like 10% difference. So again, 100 shares, 110 shares, 200 shares, 220 shares. And keep your eye on the ATR because if volatility changes, you'll have to adjust the position size. So again, we're going long, Discover, we're going DFS ticker symbol, we're going short American Express for two reasons. Their relative strength is all over the place. Discover is in 50th spot, give or take. American Express is in 350th spot. What's the biggest beef or the reason for it? Well, American Express has a lot of businesses that it deals with. Discover Financial deals mostly with consumer. Consumers are heating up spending. Businesses are not. You got the entertainment, travel, that's not heating up right now. COVID-19. And there's a higher credit risk to American Express because you got to pay it off right away as well. So again, long Discover, short American Express. For every 10 shares you buy of Discover, you could sell 11 shares of American Express. The volatility is like 10% higher. You just learned a very important lesson. And again, Jeff Zinaneri is the specialist in these pair trades. But I saw a great one over the weekend, so I wanted to point it out to you. Hope that helps. Folks, if you need some help navigating this volatile market, then listen up and listen up good. Over the past few months, I've been using a secret weapon that has kept me safe during this crazy market. It works during and after huge market crashes, protecting your portfolio on the way down, and delivering stocks primed to explode higher during the rebound phase. Considering the market we're in right now, folks, I honestly don't know if there's ever been a better time for the strategy that I'm about to give you. Click on the link below to see how you can use my system and make a potential 92.5% return in 4 weeks or less. That's almost 100% return in a month. What are you waiting for?